We are covering these 8 top stocks with big percentage gains today. While watching bullish price actions, let us inform you. Our review on CXAI. CXApp Inc. is a tech company that's laser-focused on reshaping the modern workplace using a smart combination of customer experience and artificial intelligence. Their core product is a SaaS platform that streamlines how people interact with the office. Everything from desk and room booking to indoor navigation, employee communications, workplace analytics, and even event management. It's all rolled into one sleek platform aimed at delivering a more intelligent, efficient hybrid work environment for the enterprise world. Now, let's talk about what just happened. XCAP stock went absolutely vertical today, up a jaw-dropping 76% on monster volume, with over 92 million shares traded. And this wasn't your run-of-the-mill pump. The rally came hot on the heels of their latest earnings report and conference call, which, despite a few bumps, struck a tone of real progress and momentum that clearly resonated with the market. At the heart of the update is the company's ongoing transformation into an AI-powered, subscription-driven business. We're talking double-digit ARR growth, 87% of total revenue now coming from subscriptions, and a notable jump in net revenue retention. All signs that their pivot is working. This isn't just a flash in the pan. It's part of a broader strategy that's starting to show real traction. They've also tightened things up financially. Operating expenses dropped by a massive 66% year over year, down from $58 million to just under $20 million. That kind of cost discipline is hard to ignore. Gross margins improved too, now sitting at 82%, up from 78%, which is a big win as they shift toward higher margin recurring revenue. And while losses from operations were flat compared to last year, the company posted a 30% year-over-year improvement in EBITDA, a healthy sign they're making the business more efficient while still investing in growth. One of the biggest moves they're making is around their agentic AI platform. This isn't just buzzword bingo. They've unified their code base and doubled their engineering team in Silicon Valley to push development forward. Bringing in Terry Blanchard as SVP of Engineering is another signal that they're building out serious tech chops. It's all part of a plan to expand their AI capabilities and offer smarter, more responsive solutions for the hybrid workplace. There were also a few key wins worth noting. They rolled out their CXAI kiosk with a major tech company, signaling early traction in product adoption. They also landed a major localization project for a global entertainment client, deploying their software in 8 languages. That's the kind of enterprise validation that could open more doors globally. Add to that 37 patents filed and 17 granted, and it's clear CXApp is carving out a solid IP moat to protect their lead. Now, there are still some challenges. Revenue saw a slight year-over-year dip, and they've delayed filing their 10K, never ideal and something to watch. But investors seemed more focused on the bigger picture. This is a company actively cutting fat, leaning into AI, locking in big-name clients, and executing a pivot toward scalable, recurring revenue. With strong guidance for 2025, a healthy balance sheet, and funding in place for at least the next year, CXApp looks like it's positioning itself for sustainable growth. Bottom line, CXApp is one of those under-the-radar names that just showed it's serious about scale. The company has momentum, a clear strategy, and the early signs of execution that investors love to see. If they can keep delivering, especially with their AI roadmap and enterprise partnerships, this could be more than just a one-day wonder. It's definitely one to keep on the radar. Our review on XHG XChange TEC.INC, formerly known as FLJ Group Ltd, is a company that got its start in the long-term apartment rental game in China. They cater mostly to young urban renters, offering branded apartments with perks like bi-weekly cleanings, broadband internet, and optional room services. Most of their business is driven online. Think mobile apps, search engines, and social platforms like WeChat to reach their target audience and keep their properties filled. But today, the story isn't about rentals, it's about a major pivot. The company just announced it's stepping into the insurance world, acquiring a licensed insurance brokerage firm based in Hong Kong. That move sent the stock absolutely flying, up 50% on the day, and it's easy to see why the market is intrigued. This isn't just a side hustle. With this acquisition, XChange is plugging directly into the highly regulated but lucrative Hong Kong insurance market, with the ability to start offering tailored insurance products to customers not just in China, but globally. It's a bold shift from real estate services to financial products, and it tells us XChange TEC is serious about expanding its footprint beyond just rentals. Insurance has a totally different margin profile and opens up recurring revenue streams that are stickier and potentially more scalable. Plus, by operating out of Hong Kong, they're stepping onto a more global stage. There's still a lot we don't know, like how they plan to roll this out, what kinds of insurance products they'll launch, or how they'll integrate it with their existing customer base. But the market clearly likes the ambition and the potential upside. A 50% move like this suggests investors are betting this acquisition could mark the start of a larger transformation story. Now, of course, with any pivot this dramatic, there are questions. Can a company known for apartments really make a name in financial services? Will their existing tech and customer base translate to this new vertical? And will regulators and competitors welcome this shift? Time will tell. But for now, this is a name that just went from under the radar to one worth watching very closely. Our review on WCT. Wellchange Holdings Co Ltd is an investment holding company that plays in the software development space. Pretty niche, but with some real weight behind it. Through its core operating subsidiary, XChange, they're focused on delivering customized software solutions, cloud-based SaaS platforms, and design and development services. So, while they're not necessarily a household name, they're deep in the business of powering how other companies run, whether it's cloud transformation, tailored enterprise software, or back-end systems for scaling businesses. Now today, Wellchange turned a lot of heads. The stock jumped a massive 43%, and what's even more eye-catching is the volume. Over 208 million shares traded. That's a monster day for a name like this, and it wasn't just a one-and-done pop either. We saw not one, not two, but 3 different surges throughout the session, each one breaking out over 30%. That kind of action usually says 2 things. Serious momentum is building, and someone or many someones are betting that something big is either happening now or just around the corner. There hasn't been a headline drop yet, which makes this even more intriguing. When you get that much volume flooding into a stock this quickly without a formal announcement, it's often either a sign of a leak ahead of news, some major behind-the-scenes development, or momentum traders zeroing in on a low-float setup with explosive potential. And given Wellchange sector, cloud-based SaaS and custom software, it fits right into some of the themes investors love right now. AI infrastructure, digital enterprise transformation, and recurring revenue models. Let's not forget when companies like Wellchange show this kind of technical strength, especially with multiple breakout points and high-volume confirmation. It tends to draw in not just day traders, but even swing traders and institutions looking to front-run a re-rating. And if there's a catalyst that gets confirmed in the next few days, a new client, a tech launch, or even a cross-border partnership, this could go from just a hot ticker to a full-on narrative trade. So the takeaway here? Wellchange might have been flying under the radar for most investors, but today's move definitely pulled it into the spotlight. Whether this was a pure technical move or the start of something more fundamentally driven, the price action says people are paying attention now. It's the kind of setup that could continue to run if any sort of catalyst confirms the move. Either way, this is one to watch very closely over the next week. Our review on SOBR. SOBR Safe Incorporated is a tech-driven health and safety company focused on transdermal alcohol detection. Basically, they're building smart, non-invasive tools like wristbands and biometric scanners that can monitor whether someone has alcohol in their system in real time. It's not just for individuals. It's meant to help organizations with things like workplace safety and substance abuse policies. Their key products include the SOBR Sure Wearable and SOBR Check, a stationary scanner that gives admins instant feedback on alcohol presence through a fingerprint scan. Now, here's where things get interesting. Just a day after a 1-4-10 reverse stock split went into effect, SOBR stock absolutely ripped, up 42% on the day, with a breakout move that touched 95% intraday. That's not something you see every day, especially right after a reverse split. These kinds of moves can be tricky to interpret because reverse splits are usually done to meet minimum listing requirements or clean up a messy cap table. Not typically something that excites retail investors, but this one hit different. So what might be going on? For one, the reverse split reduced the float, which can tighten up supply and make it easier for the stock to move when buyers come in heavy. Add in the fact that SOBR Safe operates in a unique space, real-time alcohol detection, which has potential applications in everything from corporate safety to rehab tech. And you start to see why this caught fire with traders. Plus, there's something about the timing. This wasn't a slow grind higher. The move was sharp, explosive, and packed with volume, which suggests this wasn't just technical. It could be a mix of momentum traders piling in and investors speculating on what's next. Maybe there's anticipation of a new partnership, product rollout, or even fresh demand from government or enterprise clients. This kind of tech is niche, but when it clicks with the right audience, like logistics companies, schools, or public safety departments, it can scale quickly. Bottom line, SOBR Safe might have just pulled off a rare post-split rally that actually brought a new interest instead of pushing people away. Whether it can hold this move depends on follow-through and whether the company can back it up with news or traction in the market. But today's price action definitely put on the radar, and it's one to watch closely from here. Our review on FORD. Forward Industries Incorporated is a global player in the design, sourcing, and distribution game, primarily serving medical and tech clients. They've got two key sides to the business. On one hand, they're moving OEM accessories like carrying cases for blood glucose kits and other portable medical devices. On the other, they've got their design and engineering segment through IPS and Kabloo, offering full-stack product development services, especially for US-based customers. Now today, this stock came to life, up 38% on the day with a strong 35% breakout late in power hour. That kind of move, especially when it hits with momentum at the end of the day, usually says one thing: someone's taking notice and fast. Here's what's interesting. There wasn't any flashy PR or headline driving the move, at least not publicly. So this could be one of those under-the-radar, low-float plays where a combination of speculative buzz and technical breakout action fuels the fire. Maybe traders are betting on upcoming developments in the medical device space, especially as health tech continues to grow. Or maybe there's quiet confidence in their design arm, which has quietly become a solid value add for clients needing hardware and software support. Keep in mind, Forward has always flown a bit under the radar, but they sit at a nice crossroads between health tech and contract design, two sectors that have tailwinds. If this momentum holds into next week and volume stays elevated, it wouldn't be surprising to see this move extend, especially if it gets any kind of catalyst to validate the action. Definitely worth keeping an eye on. Whether this was just a pop or the start of something more meaningful, the price action today said one thing loud and clear: Forward's on the radar again. Our review on ICCT. iCoreConnect Inc. is a cloud-based software company that's all about helping healthcare providers, especially in dental and medical, work smarter, not harder. They've built out a full suite of SaaS solutions, more than 16 in total, designed to streamline workflows, boost efficiency, and ultimately drive profitability for practices. Whether it's electronic prescriptions, verifying insurance, HIPAA compliance, or managing claims, they've built a platform that tries to cover it all. And with over 100 partnerships across healthcare associations nationwide, they've definitely established a strong footprint. Now today, iCoreConnect absolutely ripped. Up 34% on the day with 83 million shares traded and a monster 45% breakout right at the open. That's the kind of action that grabs attention fast, especially in the small cap tech space. It's one thing to get a little bump on no news, but when it opens with that kind of strength and holds throughout the day, that usually says there's something brewing under the surface. There wasn't a new press release dropped today, but sometimes these moves don't wait for a headline. It could be speculative buzz ahead of an upcoming announcement, maybe traders are front-running earnings or news, or even just a technical breakout on high relative volume that kicked in some algo and retail momentum. And let's be real, iCore sits at the intersection of two sectors the market still likes, SaaS and healthcare. That combo tends to attract attention, especially when traders are looking for high-growth stories or acquisition targets. The company's strategy of locking in SaaS deals with medical and dental providers across multiple states gives them a sticky customer base. Plus, with compliance-driven tools like iCoreX and iCoreA, they're solving problems that healthcare practices have to address. This isn't optional tech, it's need-to-have software. So it makes sense that investors might be waking up to the value here, especially if revenue and user adoption numbers start to climb. All in all, today's surge puts iCoreConnect back on the map. Whether it's just momentum or a lead-up to something bigger, this is one to keep an eye on. When a healthcare SaaS name breaks out this cleanly, there's usually more to the story. Our review on VRCA. Verrica Pharmaceuticals Inc. is a dermatology-focused biotech working on treatments for common skin conditions like molluscum contagiosum, warts, and even some early-stage skin cancers. Their main product, Acanth, is already approved for molluscum and is being explored for other types of warts. They've also got VP315 in the pipeline aimed at skin cancers and VP103 targeting plantar warts. Today, the stock popped 26%, and that's a big move for a company trading under $1. Interestingly, this jump didn't come from groundbreaking news. In fact, RBC Capital just reiterated a hold rating with a $2 price target. So not overly bullish, but when your stock's sitting at 53 cents, even a neutral outlook with upside can spark some action. Analyst consensus is still leaning moderate buy, with an average target of $3.33, so that kind of upside potential tends to catch the eye of traders looking for deep value or turnaround stories. It also helps that biotech names like Verrica can move big on momentum or anticipation, even without immediate news. At a $38 million market cap, this is still a micro-cap play, but Acanth is already commercial, and if they gain traction in new indications, that could change the narrative quickly. So while RBC is staying cautious, investors today clearly saw enough reason to place their bets. Our review on NWTG. Newton Golf Company Incorporated, previously known as Saks Parente Golf, is a tech-driven golf brand that's been making waves with its innovative products like high-performance putters, golf shafts, and accessories. They've got some cool items in their lineup, including the Newton Fast Motion shafts, which are designed to give golfers a boost in swing speed without sacrificing control. Plus, their gravity premium putters, such as the Deuce and the DRAC, are pushing the envelope in terms of precision and design. Today, the stock saw a solid 25% pop. It's one of those moves where you've got to wonder if there's a mix of momentum and optimism surrounding the brand. With the golf season ramping up, product launches, or potential deals with big-name retailers, it's possible that traders are getting excited about the company's growth potential. They're already selling their products in the US, Japan, and South Korea, so there's a bit of global reach in play too. Given that Newton is still a relatively niche player in the golf space, this spike could be part of a broader trend of investors looking for emerging brands with disruptive products. With the growth in demand for advanced golf gear and technology, this might just be the start of something bigger for Newton Golf. Keep an eye on how they build momentum, especially if more partnerships or product announcements follow. Please subscribe, give the video a like, and watch more from our playlist. Thanks.